Good day traders, 1 minute mindset reset. Today we're talking about locking in the cash. So it's day 3, parabolic opportunities on day 3, Wednesday, our free cash Wednesday, and we had trade opportunities in the Asian session, the London session, and of course the New York session. We had major red news at 10 a.m. A great example on the gold in particular, we had a first hour short squeeze coming out of the gap time from London on day 3. London had made a higher high. It's day 2 from yesterday's failed breakout at the low of the week, but we're on day 3 in our Monday to Wednesday template. And of course we had one push, two push, the third push went vertical before major red news exploded, 150 pips from the beginning of the session. And just prior to our major red news, of course, traders hopefully exited that trade. On the news release itself at 10 a.m., they spiked down in an instant in that first minute, but it was instantaneous. They spiked right down to the low of the session, right to the low of the session, wiped out all the parabolic longs. So if you didn't take the money off the table, you were obviously sitting at neutral, small loss, or staring in amazement and bewilderment. But we saw that that put a high of the day in place. And again, peak formation low in London, higher high in the first hour, peak formation high, peak formation low. The market proceeded to auction back up to the high of the day after major red news in that third hour. And we have now one push, two push, and a third push to the high, the end of the third hour after the news. And so the point I'm emphasizing here is when you lock in the cash, two things. You have to have a plan before you get the trade in play, knowing that you're going to exit the market and lock in the money. Never regretted ever taking money off the table, whether I missed out on a bigger move that came afterwards. None of that's relevant. It's knowing how to execute your plan in live time and being comfortable and confident in following that through, not changing mid-tact, not holding on for more, not second guessing everything, but just entry, exit, stop loss, and sticking to that plan, because you can always modify and improve on the next one. Or if you executed flawlessly, when you want to go back into the market after major red news, so be it. But now you've locked in that money and you've got off out of that trade. You can reset, have a fresh pair of eyes on the screen. We had parabolic opportunities in Asia. Well, first red days, day 1, day 2, day 3, inside day on Monday, for a vertical blow off back to the lows on Friday's pump day. We had a US Swiss parabolic move out of a 3-day setup. And one trader asked, how do you get in Europe? Once it's parabolic, it's a continuation trade. Trend into the open of the session, pull back and back in line with our EMA, higher high, higher low for the parabolic continuation trade. Same trade we had last night on Tuesday in the US session on the pound Aussie. Already parabolic, continues to go higher, auctions back into the EMA for the squeeze to continue that move. Once it's parabolic, not consolidated, parabolic. It's already in the parabolic mode. Important to understand the difference. Once it consolidates, I have no idea. People are still trying to get in and trade, and I have no idea. Once the market has done its blow-off move, that is where I look to lock in the capital. I'm not worried about chasing it afterwards. I'm not worried about trying to figure out what it's going to do later on. None of that. I'm looking for the parabolic opportunity because that's the easy money. After they move it, consolidate, timing window changes, all those things, that's where it gets complicated, and that's what gets traders trapped again into consolidations. Think about it. Peak formation, consolidation. We don't want to trade in the consolidation. We want to trade as that consolidation is getting ready to explode. So fantastic opportunities. Indexes, not huge moves that I've seen, unless they've moved later since I've been at the screen. But we had again day 3, Wednesday. S&P, Dow, lower highs, lower lows. Thought the NASDAQ might blow off. We had a beautiful pump day on Friday. Trap volume on Tuesday. Creeping trend, making slightly lower lows. Pump up on the news and New York Open for potentially a measured move. It didn't eventuate, but still an easy 50 to 75 pips, depending on where traders got filled and where they exited. But again, sticking just to the day 3 easy parabolics. Once the market has coiled parabolically in those 3 days, other time frame traders typically are driving those moves, especially the larger range expansions. Now gold, we're still on the front side. We haven't had a first red day. We have non-farm ADP tomorrow and a failed breakout at the low of the week on Tuesday. That makes today day 2, and again still front side. We could have a narrow range day tomorrow, a first red day, no idea, continue. But day 3, Wednesday now becomes day 1, heading into free cash Friday. Day 1, day 2, day 3. Wednesday, Thursday, Friday. So Thursday again, we have major red news. We may get parabolic opportunities, but it could also be a chop day or a narrow range day. Volatility in the US session. So trade smart. Remember, we have non-farm on Friday, and it's free cash Fridays. So keep it simple, traders. Stay focused. Lock in the capital. Put the cash in your account and get off the screen. Keep it simple. Enjoy your day, and may the markets go with you.